Overheads. This is an aggregate of indirect material cost, indirect labor cost, and indirect expenses. Overhead is also known as on cost. Thus, overhead equals to indirect material, indirect labor plus indirect expenses is known as overheads. Overhead also divided into production overheads, administrative overhead, and selling and distribution overhead. Production overhead, also known as factory overhead, works overhead, or manufacturing overhead. These are overheads which are concerned with the production function. It includes indirect materials, indirect wages, indirect expenses in producing goods or services. Indirect material. These are the materials which cannot be conveniently identified with the individual cost units. These are minor in importance, such as small and relatively inexpensive items, which may become a part of the finished product. Example: pins, screws, nuts, bolts, thread, etc. Those items which do not physically become a part of finished products. Example: coal, lubricating oil, and grease, sandpaper used in polishing, soap, etc. Indirect labor. It is of general character and cannot be conveniently identified with the particular cost unit. In other words, indirect labor is not directly engaged in the production operations but only to assist or help in the production operations. Indirect expenses. All the indirect costs other than the indirect materials, indirect labor costs are termed as indirect expenses. These cannot be conveniently identified with a particular job, process, or work order and commonly to the cost units or cost centers. Indirect material examples: coal, oil, grease, etc. Stationery in factory office, cotton waste, sweeping broom, etc. Indirect labor examples: works manager salary, salary of a factory, office staff, salary of plant, salary of inspector, and supervisor, wages of factory sweeper, wages of factory watchman. Indirect expenses of production overheads are factory rent, depreciation of plant, repair and maintenance of plant, insurance of factory building, factory lighting and power, internal transport expenses, office and administration overhead. This is the indirect expenditure incurred in general administrative function, i.e., that is, in formulating the policies, planning and controlling the functions, directing and motivating the personnel of organization in the attainment of its objectives. These overheads are of general character and have no direct connection with the production or sales activities. This category of overhead is also classified into indirect labor, indirect material, indirect expenses. Indirect material examples: stationery used in the general administrative office, postage, sweeping, broom and brush, etc. Indirect labor examples: salary of office staff, salary of managing director, remuneration of directors of the company. Indirect expenses examples: rent of office building, legal expenses, office lighting, power, telephone expenses, depreciation of office furniture and equipments, office air conditioning, sundry office expenses. Selling and distribution overhead. Selling overhead is the cost of promoting the sales and retaining the customers. It is defined as the cost of seeking to create and stimulate demand and of securing orders. Examples are the advertisement, samples, free gifts, salaries of a salesman, etc. Distribution cost includes all the expenditure incurred from the time the product is completed until it reaches its destination. It is defined as the cost of sequence of operations which begins with making the packed product available for the dispatch and ends with the making the reconditioned retained empty packages, if any, available for reuse. Example for Examples of selling and distribution overheads are carriage outwards, insurance of goods in transit, upkeep of delivery vans, warehousing, etc. Selling and distribution overheads are also grouped into indirect materials, indirect labor cost, indirect expenses. Indirect material, indirect labor, indirect expenses. Indirect material expenses examples: packing material, stationery used in the sales office, cost of samples, price list, catalogs, oil, grease, etc. For delivery vans, etc. Indirect labor examples: salary of sales manager, salary of sales office staff, salary of warehouse staff, salary of drivers, delivery vans, etc. Indirect expenses examples: advertising, traveling expenses, showroom expenses, carriage outwards, rent of warehouse, bad debt, insurance of goods in transit. So we have learnt in overheads there are production overheads, administrative overhead, selling and distribution overhead, and in each overhead there are indirect material, indirect labor, indirect expenses. Now we comes to the total format of cost sheet. Cost sheet consists of prime cost. In prime cost we have direct material, direct labor and direct expenses. Production or manufacturing overhead. In manufacturing or production overheads we have indirect material, indirect labor, indirect expenses. These two combine total known as gross factory cost. To this gross factory cost If we add opening work in progress, that is previous year's closing work in progress becomes the present year's opening work in progress. These two minus closing work in progress of the current financial year, gross factory cost plus opening work in progress minus current year's closing work in progress, known as factory cost. For factory cost, if we combine the administrative overhead, in administrative overhead we have indirect material, indirect labor, indirect expenses. These becomes cost of production. To the cost of production, we have combined opening finished goods, unfinished unfinished last year's finished goods becomes now opening finished goods for the current financial year minus present current financial year's closing finished goods equals to cost of goods sold. For the cost of goods sold, if we add selling and distribution overheads, in selling and distribution overheads we have indirect material, indirect labor, indirect expenses. If we add cost of production to opening finished goods less closing finished goods, it becomes cost of goods sold. If we add selling and distribution overhead, it becomes cost of sales. To this we will add a margin of our profit percentage. It will becomes the sales. So friends, this is the format of cost sheets, and the components included in the cost sheet is explained separately and once again explained in the sheet also. So this is very important for everyone to have a depth knowledge in costing. Should primarily be perfect about the components included in each and every subheading.